Good morning and welcome to this weekly market update from AGM Markets. Today is the 22nd of March 2013. What I'll do today is pretty much review what's been going on in the week, what setups I've been looking at, and also have a look at any current setups out there in the markets which hopefully you can benefit from. We will not make any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. For any new followers, we have 3 moving averages in each of these charts. The red one is a 55 simple moving average. The gold one is the red one is a 55 simple moving average. The blue one is a 100 simple moving average, and the gold is a 200 simple moving average. Okay, and this is the euro dollar daily chart. So what has been going on this chart? We spoke about it in last week's video. This was the main trend line, and we're now broken below that. So we're well below this now, and we're technically in a new downtrend, which is pretty well. I mean, the one thing I will just say on this daily chart, because I'm going to zoom into different time frames. I think it's more interesting time frames than this euro dollar chart. But what is key on this is we have, if we draw a Fibonacci retracement from the lows to the highs, we are sitting on, well, I mean, we technically had a daily candle close below this 50%, which would make you think, oh, it's going to come down to 61.8, but I think it's key to look at the weekly for such a big level like this, because we're currently above this 50% now, and we do have the 200-day moving average just above that as well. So keep an eye on that, because it is currently capping this pair. So yeah, I mean, in terms of sort of longer term players, there will technically, a lot of people will be in a current long setup with probably stops just below the 61.8 for the long term swing traders. But in terms of, if you draw your trend line from there to there, we're technically in a new, which could be a new downtrend. I mean, it's been trending down pretty much all year really. Well, I suppose I think this trend line has started from, it's the 1st of February, sorry, so pretty much from the start of February. So nearly 2 months now we've been in this downtrend. But yeah, in terms of this daily chart, it's all about this key level, this one spot, 28.77s. What will happen if we get a daily close above this 200-day moving average, and then we break this trend line, then we have the 100-day moving average above that. But what I'm now going to show you is, I'm flipping to the 4-hour chart, because obviously if you're just trading, if you're day trading, you don't want to be, well, I mean, the daily chart is more for the longer term players. A 4-hour chart can be quite useful for day traders, and then we'll look at the 1-hour chart as well. But basically I just want to show you how you can sort of trade dips. For example, first one here, if you draw a fib from the lows, if you draw a fib from those highs to the recent swing lows, bam, straight off the 50% retracement, we then broke down. Then what you can do is you can just keep on moving your fibs from new highs to new lows. So we have a new high there, we have a new high there, and then the lows here, I'll just draw this a little bit wider, and you can see, bam, straight off the 61.8. So the sort of 50% 61.8 range, we've then come back down, broken. Then if you draw from your lows here to the highs there, just make that a bit wider so you can see where we've come off here, bam, straight off the 50%, come back down. So a classic sort of example of how you can just trade dips and how you can use Fibonacci retracement tool. It's been happening pretty much all this downtrend. If I just draw it to the next low there, so you can see that low there, I'll just make it wider so you can see that low, and this high here, the 1 spot 33.08, I'll just make that a bit wider so you can see. Bounce, we've come back down, bounced off the 1 spot 31.17s up to 50%, and then come back down. So classic example of how you can been selling dips, and this is what's been happening on this chart. I'm just going to zoom into the 1 hour here, and you can see what has gone on this week. We've had this high on the Monday. Yes, we had the Sunday night gap, which I'll talk about in a minute. Let's say if you just draw, so you see from that high there to those lows here, the Monday lows, so Friday highs to Monday lows, bring the fib out a bit wider, bam, straight off the 50% there, you can see that spike candle, which I'm hovering my cursor over now, at the 1 spot 29.94. we test that level and we sold off aggressively. Classic example, if you sold there, you could perhaps put your stops just above the 61.8. So what a lot of fib traders do is they'll sell off one fib level and then put the stops behind the next fib level. And also, let's say yes, that fib is technically done, it broke those lows. All you need to do then is just extend. If you extended your fib to the next low, you can then see we've got another spike at the new 50% level, which coincided with that selling area to the left from the previous 50% retracement. So it's been a really technical week this week. A lot of people are saying yes, it has been technically choppy, but if you choose your trend, which has clearly been a downtrend in my opinion on the 4 hour, and look for selling opportunities via dips or Fibonacci retracements, there's been some really good opportunities this week in my opinion to make some pips. And currently, I mean, let's say that a lot of people are saying this fib hasn't, so the gap hasn't filled. So this gap that we got on the Sunday night, so on Friday we closed up here at one spot 30.75, then we opened down here at one spot 29. So we're talking about 170 pip gap here, and these gaps do tend to fill. We got half of the gap filled, but the full gap still hasn't filled yet. So a lot of people will be looking for buying opportunities, and a classic buying opportunity here that well, a lot of people will still be in is this fib from the lows here to the highs, and you can see we're getting buyers coming in at this 50% and 61.8 retracement sort of buying zone. So it's good to look for healthy retracements. In my opinion, that's what's been happening here, and you can see buyers are starting to come in trying to push for this gap fill. Gaps don't have to fill, but they do tend to fill in my experience of trading. So yeah, that's the euro dollar chart. I thought I'd just go through what's been going on in the week on that chart, and we'll look at all the different time frames, and just to sort of, I mean, just to look out for next week. It's all about the weekly candle close off of that key fib level, which I spoke about earlier. And that's just a classic, because I mean, I posted through these charts up in the Twitter feed. I can post them for you, and also if there's anything that you want to look at regarding euro dollar, then feel free to comment under the video. But anyway, well, let's go to the cable chart now. And what's been going on this cable chart, I think we spoke about in the previous week video. This is the weekly chart, how the fib from that lows, oh no, sorry, it's not this weekly chart, ignore that, I'm thinking of another chart here. Let's go back to the daily. What we've got on this daily, it's been sell off quite aggressively on this daily chart, and as I think I said in last week's video, we are technically due a retracement. Normally if you get a big sell in a long sort of downtrend like this, with the bears really out of control, I would always expect some sort of pullback at some time. I mean, the market tends to want to come back to its moving averages from time to time, and here you can see it started to bounce, and it looks like it's gunning for that 55-day moving average in my opinion. Also, if we zoom in, we also have the gap from Sunday as well, which the higher the gap is, one spot 52.30s. We're not that far away from it. We're sort of about 40-50 pips away from it at the minute, and that also kind of coincides with this 200 bar moving average on this 4-hour chart. So it could be an interesting selling opportunity there, which I'm sure a lot of traders will be into. It'll be interesting to see how price reacts if we do get up there. Also on this 4-hour chart, you can see the 55 bar moving average and the 100 bar moving average are crossing up at the minute. You can see we've started to get some rotation towards the upside on this cable chart. If we flip it to the 1 hour, I think this is a much more interesting chart. We were speaking about the Fibonacci retracements on that euro dollar chart. Prime example here, we had this first fib here from these lows to that swing high there. I'll just draw a little bit wider so you can see where we've come off. Bam, straight off the one spot 49.06 level to the pip, also off that 55-hour moving average on this 1 hour chart, and we've got a really decent rotation towards the upside. Then what you could do is draw from the low of that 50% there, so where we bounced off, and then extend to the new high up here. So you can see that, and I'll just draw it wider. And surprise, surprise, we got another bounce off this 50% retracement off the one spot 50/40s level, and we got a decent rotation towards the upside. You can see it got quite choppy here. We had the UK budget this week. The market got very volatile indeed. There's a great opportunity to buy there. You can see that to the pip that we originally rotated towards the upside, and it came back down, bam, straight off that 50% to the pip there. You can see that big spike. Clearly just people having pending orders in at this level, with stops probably buying the 61.8 or more below the lows of the day, and we've got decent rotation towards the upside. So that's been the cable chart this week. It's starting to look like we're getting some sort of short-term uptrend on this cable chart. Let's say if those highs have now printed, one thing a lot of traders will be looking at, in my opinion, is this fib from the lows to the highs there. It perhaps may come back down and test this trendline support. We could get a decent trendline confluence. That's one thing that I keep set up on my charts. Let's have a look at the dollar Swiss chart. This is the daily. Nothing massively interesting on this daily, to be honest with you, except I think, yeah, this is a key fib move here. So it's just purely from the high. I've just drawn a fib here from the highs on this daily chart to the key low. Sellers are coming in at this sort of 50% and 61.8% zone. So, and you can also see, if you look to the left of your chart here, it's hovering my cursor over it, it's a previous selling zone, and it also, this selling zone here to your left coincided with the 100-day moving average. So a key Fibonacci retracement level and a previous selling zone, a great confluence there, and you can see the market has already started to come down from this level. So that's the daily chart. Let's zoom in a bit. Let's have a look at the 4 hour. I'd say we're in some sort of uptrend here. It's still technically holding, although it is looking quite heavy. I suppose if you look at if you zoom in a bit on this 4 hour, I suppose if we bring it out, the trend line out a bit, then we're pretty much sitting right on it now. So it is looking quite heavy. It's been quite choppy really these last few days. You can see it's been in a sort of sideways range. If you drew a fib from that recent swing low to that high there, and then if you drew it across, you can also see 50% retracement. A lot of buyers have been coming in at that level, and you can see we're pretty much sitting on that level now. So, but it has been struggling to get some really bullish momentum towards the upside, but still a level is still a level. Wouldn't be surprised to see a lot of buyers coming in at this level and trying to push that market back up. That's all I'm really focused on this dollar Swiss chart, to be honest. You can also see it a bit clearer on the 1 hour chart. So that's pretty much the low on that 1 hour chart. So I'm just going to extend this fib up a bit. Bear me 2 seconds. Yes, if we draw it from now to the highs there, and if we extend it wide a bit, so you can see a bit clearer. So technically, in this 1 hour count, you could say it's technically closed below, but I mean, I personally think of it as a sort of zone, a buying zone in between the 50% and the 61.8. You can see a lot of buyers are coming. There's a lot of lower wicks there, especially around there on the left. You can see the sellers pressed into that 50% zone, and the buyers came back in and pushed that price up and made it close above the 50%, and we got a rotation towards the upside. But it is looking quite heavy at the minute, in my opinion. The dollar yen chart hasn't been massively interesting of recent. It's just been a pure uptrend. So I mean, the way a lot of people have been playing it is just to sort of buy the dips really. And as you can see here, if we draw a fib here from this obvious dip here, so if you draw it from the highs to lows to those highs there, bring it wider, you can see a nice bounce off that 50% retrace zone. And also the next sort of swing low now, I'd say, would be this one here, If you draw that to the highs, you can see we're near the 50% zone as well. But also you can see previous highs here now trying to act as support as well at that sort of 94.50s level. So keep an eye on that. A lot of buyers are already coming in at that level already, purely sort of buying the dip really. But I mean, in terms of dollar Swiss chart, so I mean it's just a pure uptrend at the minute, and well, you can see it's posted a nice 4-hour reversal candle as well. So a lot of people will be buying that, I would assume. But no, I just personally think it's more interesting charts. I mean, it looks so overextended, but I mean, of course, there's nothing stopping it keep on going up. There's a lot of monetary easing going on in Japan at the minute, which is really weakening the Japanese yen. So the buyers are still well in control on this dollar yen chart. The Aussie dollar is in a short-term uptrend at the minute, but of course, if let's say if you draw your fib from the highs to the lows here, which is a key swing opportunity. We have broken above that 61.8 now, so I suppose you could say that the buyers are well in control, and it's looking very bullish indeed. I mean, if you flip it to the 4-hour, the 4-hour chart's been really interesting actually. I think I might post this on Twitter actually. In terms of just a pure uptrend and dip buying opportunities, a similar sort of example that I did on euro dollar. In terms of Fibonacci retracements, if you draw your swing low to the swing high there, that was the first opportunity to buy at 50%. Buyers came in, pushed the price back up, and then you can draw a new high from there and a new low from here. Where in fact, we'll look at this one first. This one didn't quite reach the 50%, but I guarantee you it hit the 32.8. The next sort of dip there, buyers came in, pushed that price up. Then if you extend your fib to the highs there and that low there, move this fib a little bit wider so you can see, bam, buyers coming in again at the 50% level, and the price has been coming up. So I mean, yeah, it's just a pure uptrend really. We'll draw a trend line as well, and you can see it's just been holding really nicely all week. The last sort of few weeks really just been holding very well. I suppose you could probably draw a fib from that recent dip low there to the highs there and see how it reacts, but maybe it wants to come back down to that trend line support. So that's the way that I keep my chart up personally on this Aussie dollar. But no, it's been playing out very nicely, very technical indeed, especially on that 4-hour, the 4-hour, the 1-hour as well. The 1-hour you can see the dips a bit more clearly maybe, but there's not a massive difference between the 4-hour and 1-hour in my opinion. That's done for the Forex. Let's have a look at the gold chart. Gold on the daily, it's still in this downtrend, but nothing massively interesting in terms of this gold chart really. In terms of the technicals, I mean, we're quite near this 55-day moving average. See what happens if we do get up there, but I think there's more interesting time frame, especially if we look at this 4-hour chart. There's a nice fib this week. Just zoom that a bit. Bear with me 2 seconds. Yeah, so gold this week has a nice fib opportunity from that key swing spike low there. Look for the spikes in my opinion. Look at a good fib opportunity. But bam, a clean fib retracement range there from that key swing low to that swing high there. Bam, we came back down, we retraced, we bounced off the 50%, and then we've rotated higher. So that's a key fib that happened this week. But the way that I purely keep my chart up now is just to look at this trend line support that's happening now. We're starting to form a mini trend line. It is looking a little bit heavy these last sort of few 4-hour candles, but also notice this 55 bar moving average, which is coinciding with this trend line support as well. See what happens if we do come down there. We could get some interesting price action around there. Okay, that's all for today. I hope you enjoyed that video. I hope you found the technical analysis useful. If there's any other charts that you want to have a look out for in next week's video, then feel free to post under the YouTube feed. We'll post this out on our Twitter feed as well, at AGM Markets. Hope you have a great rest of the week, trading day, great weekend, and I'll catch you next week. Thanks for listening.